Good morning, everyone. This is Daily Trading Analysis with the weekly recap. This week has been a little bit of a roller coaster, and the end of the week yesterday afternoon was really a disaster. We ended the week pretty bad because of Trump and the economic data for inflation preliminary University Michigan 1 year expectation. We had a lot of earnings that we are going to analyze. Those were quite good. So the sentiment started the week pretty good, but it turned red at the end of the week. And the sentiment towards the weekend and the start of next week is not pretty good. So we are going to analyze why it is so important, why Trump is creating a lot of volatility and uncertainty. And we are going to also analyze the price action, what to expect, because we are in a pretty narrow range weeks. And always we really have to be patient until Trump and the market makes their mind. So we are going to start analyzing the economic data. We started with JOLTS opening with quite a big drop in openings, suggesting a cooling labor market. Then we got the ISM data, which was higher than expected. This was positive for the services sector, for the manufacturing sector, but rising prices paid, it's also inflationary. Then on that specific data, the services PMI final, we got basically flat, which means we are stabilizing. But then a big nuke drop on the US trade balance, because this is really the why the Trump policies are affecting so much this right now. There's a trade war globally. Trump putting tariffs to everything, to every country, and this is signed by the minus 98 billion. And this is not only bad. We are coming already with a previous of minus 70. So this is widening trade deficit. On the factory orders, there's also negative sentiment because we see a decline in orders. Then construction spending is good, but then another nuke on Friday. Look at this. From 3.3 preliminary on the 1 year inflation expectation from the consumer, we got 4.3. This is huge jump, and this signifies that short-term inflation expectations, it's pretty concerned. So overall, I think we are leaning towards the negative sentiment. And in terms of earnings, we are seeing that Amazon beat earnings, ES Lilly beat earnings, Uber beat earnings, Disney beat earnings, Pfizer, PayPal, Alphabet missed a little bit on the EP on the revenue. So we are seeing a series of positive earnings expectations, but there are concerns about future growth. The outlook, the guidance is not spectacular, and this coupled with the fact that the economic data is not really surprising, really optimistic, and there's horizon still a big storm on policies and the tariffs. I think we are again for the week on a really bearish sentiment, a score of. Remember that this score analyzes everything. And this is based on my opinion and my interpretation of every single news this week. And this is exponential to both sides, or either the downside and also the upside. So having 30, it's exponentially more difficult than having 40 and 50. So this is really low. is pretty negative, and we have to really be on the sidelines for now to see how things develop. Because right now there's no clear direction in price action, in economic data. We have a lot of noise in basically everything. So for right now, I think earnings are good, but on the monetary policy, the Fed officials are also all over the place because they are expressing caution. There's an emphasis on the needs for patience, data dependency in order to determining future policy moves. So especially concerning inflation and tariffs, there are some officials that noted a big amount of uncertainty that makes the Fed decisions and the Fed environment really foggy. And there's a reason to slow the pace of cuts. And that's also a concern. So we are going to jump now into the charts. Let me just adjust this a little bit because this is the daily chart. Thank you. And as you can see, we have this zone which is being rejected a couple of times. We have also this zone which is being bought up for a couple of times. So we are in this range, which is basically 900 points for weeks, for almost 2 months. I would say already 2 months. So the start of 2025, it's pretty bad in terms of this making into trend because we had a really big moves year 2023, 2024 with a summer pullback, but then we bought up. But right now, look at this. So let me just show you again why are we stuck here? We are stuck in a 1 hour imbalance. We are stuck in a daily please fair value gap. And in the middle, we have the 1 hour, which is again showing signs of slashes, knives. We have really big volatility. The third or fourth time that my analysis on the weekly recap is based on the look at these big pull and then up, then up, then up. So I think long term, there's, excuse me about that. I think long term, there are big money players that are buying. Pretty clear that there are certain moves to the upside that nullify the big drops. And those are big drops. Look, okay, it's 1,000 points. Then another series of is 1,200. Then, then, then we had uh, a new week opening gap also this week. So we reclaimed that gap down, but then we stopped on this last week high peak, and then we drop on the news at 4 p.m. So I'm going to change to the 15-minute in order for you to really see how we dropped on the afternoon, 400 points, and we were quite. Thursday was inch day, then Friday we were waiting for that NFP data showed that basically we were we were mixed territory, but then the final nuke and the potential tariffs also gain putting a lot of pressure on the market, really big. Bonds 1 minute was pretty hard. Waiting for the data comes out, and so that was a trade for me before the open because we got the NFP candle. Look at We took either the upside buy side liquidity and the side liquidity, and this kind of move, this kind of grind to the upside, I've seen so many times that I was really willing to risk 20 points in this case, or for the weekly hunt, liquidity hunt. And that's what happens. My first target was candle, but then I saw then and I was up here and I was waiting and all I was not waiting for 22,000 the on news, but I was just having a sell order right here at 9. I think it was. So that was a 1 to 5 risk reward ratio, pretty good, 100 points, one contract. That was really my setup. My setup for liquidity hand on pretty good. Based on this fair value gap being claimed, I took first candle and my stop was so pretty good. But then this happens, and that makes me think how we are going to deal with this for next week. As I mentioned, we are again in this kind of trend. 1 hour, we are seeing up downs, downs, downs. You can see I've been keeping these marks because throughout all the week we've been building a lot of. We have sell side here, side here, or liquidity here. You know where I'm going, right? Um, this is 1 hour, and I really think we're going to see a lot of move down continuation. Not, I think we are not going to see big sell off, but we are going to see continuous pressure down. So I'm going to grab this. I think potentially might be again dealing with this move in which push higher and then a knife gap down happens. I'm going to also check on this quadrants. Have also an area here at 1,300s. But look at where we bought last time. Bought at 21,000. We're going to again drop from 900s at 1,000s. Who knows? But I'm ready for this. I will be waiting for signs of potential turnaround. Quite important. By my bias is we have liquidity down here. We just hunted last week high and then dropped significantly. We have also a bullish value gap that maybe first at here. So I expect the market to a bit find some bearishness, and then this happens for side because other markets we have Apple dropping like a rock. You have open inflationary pressures, China, trade war. There's the consumer is just really concerned. Also, the US dollar jumped quite a lot. 2-year yields are also pushing the 10-year yields. Yields overall are big time pushing. At this, every single yield is upside, and we move to later May in percent, and that means that basically we are no more pricing in cuts. maybe one cut in May, June, but no more. So that's why I think this market is hurt. Apple on the side is being hurt. Amazon 4%. Remember that Amazon had earnings and it were not bad, but the guidance were really bad. And then Google was also on bad news. Nasdaq was pretty affected Friday. Banks are also quite concerned. Look at semiconductors. Semiconductor sector minus 1%, ARM, Micron, all these guys were pretty, and perhaps also been a. It was quite a red day because there were a lot of correlations. There were, let me show you, there were a lot of correlation on drop. Basically, we had an end of the day pretty in the middle, but the volatility was pretty bad. And then the drop volatility in every single sector had risk falling down. We have semis falling down. We have bonds falling down, and then but the sentiment is pretty bad towards the red area. And then we have the Nasdaq dropping like rock. So it was pretty clear that we were going to have big issues not only on the day but also weekend and also for next week. Monday next week is going to be pretty hard. We are daily volume imbalance with being respected, and we have a lot of people down here. So let's see what happens because we are still in this volatility part. The uncertainty is pretty high, and uh, uh, as always, we have to really patience. It is so. That's all from my side. As always, if you found this video useful, please give it a like, subscribe to the channel. Thank you for your support. I'm doing this for you. I'm being transparent on what my opinion is, what my analysis, why I think, and I'm sharing this with you. Like this content, welcome to the channel. Remember that I upload videos like this weekly recap on every Saturday, and also from Monday through Friday, I upload videos, market forecast, market updates, and market recaps. So I appreciate your time as always. Do your own diligence, your own analysis. Remember that I'm just sharing my opinion and my analysis, your own work. And remember that discipline, patience are key for your success in this. Have a nice weekend, rest a bit, come back on